If you want to lose in cryptocurrency, the one thing you need to do is to simply gamble. Try to find the 100x investment. Try to find this one little completely overlooked project that will turn your $100 into 10,000 and then the 10,000 into 1 million. Try to do that a few times, and rather sooner than later you will have lost all your money. I think way too many people try to do that. And this video is against exactly that strategy. This video is about investing long term and why it makes sense to invest long term. And it tries to look at the risks of Bitcoin. So this is the exact opposite of what you see on other channels where people try to hype up a crypto, where people tell you that we're gonna go to the moon. This is the exact opposite. This is a video around balanced risk versus reward. So how much risk is there currently in the crypto market? How far can we potentially fall in Bitcoin? And how much can we expect if we hold for many, many years? What kind of return is actually realistic? And in order to answer this, we will look not just at one approach, because no model is perfect, right? But some models are useful. So we will look at 3 different approaches. And one very common way to look at this is the Bitcoin logarithmic regression. And it's very likely you have seen something like this before. And this is the first way we can estimate how far we could potentially fall in Bitcoin. Potentially, right? Not saying this has to happen, but we have to work with the worst case scenarios. And so what you see here is several years of Bitcoin data, right? Ranging to the times when Bitcoin was just a few cents to today. And we can see in the early days, returns tended to be higher, right, in relative terms. This is a logarithmic scale. So each step over here is a 10x, and we made way more percentage gains even in the early days than we do nowadays. But how far can we fall here? Let's zoom in and look at this in detail. So let's work with the assumption that we go all the way down to this channel, and let's also work with the assumption that we continue to decline as quickly as we have recently. In that case, the decline could take us to maybe something around 27,000. That's the lower end of the spectrum. And we might even fall a bit further because in the past we actually have, right? When we look at this, we didn't stop at the lower regression band. We went below that. The lower regression band was here at 7,500. We went all the way down to 5,000. So that's another 30% drop from the lower band over here. And we can also see that that kind of a drop only happened in the recent past. It didn't happen in the early days. So again, if we zoom in over here, and we expect this to continue to fall somewhat like that, 27,000 and maybe another 30% off from that, that's 19,000. That's the very worst case according to this regression model. Because that's the way you have to look at this. If this really would happen, you can't allow your portfolio to completely get shattered, and you can't allow yourself to completely dismiss crypto altogether and say, now everything is lost. Because it's the people who exactly do that don't buy those kind of dips, right? That then make the 10x on the investment, that go from 5,000 to 50,000. So that's what you have to work with here. You have to be prepared. You don't have to expect this, but you have to be prepared that this could potentially happen. For whatever kind of black swan event that might come. Nobody knows, right? That's the bearish side, but what's actually the reward? Why would you take on such a risk? Why would you even now buy at, say, 49,000 when it can still go down to 19,000? Well, the reason is we don't really know if it will go down that much, right? It could also simply just revert back up. And the nice thing we do see about Bitcoin is the very long-term upwards trend, right? That's why we stay invested. That's why we want to buy this. But how much return can we actually expect realistically? If we're not trying to ride these waves, but if we simply say we dollar cost average into Bitcoin, we buy every month, we get gradual crypto exposure to the market and say we are happy when the price goes up because we make money, but we are also happy when the price goes down because then we can dollar cost average and get more Bitcoin for the same US dollar amount every month, right? That's a very straightforward strategy. What kind of return can you expect? Now let's look at 1 year. Let's say, what's the slope of this regression in the year 2021? It tends to decline, right? But the decline in slope mainly happened here in the early days. It doesn't happen that much recently anymore. So let's look at this, 2021. So the end price is 61,800. That's the middle of the regression. The beginning price is 34,800. And so that's the annual return, 77.7% per annum. So this might go down slightly, right? Maybe in 2022, that's maybe 72% or 70%, whatever it is. But that's the ballpark, right? 70% per annum. That's how much currently this regression channel would imply we rise long-term in Bitcoin. And that's why you are invested. That's why you dollar cost average in. That's why you are okay to potentially get all of this price volatility and all of this price risk, because you get 70% per annum by buying Bitcoin, right? Not by buying some random altcoin in the top 100. That's the kind of return you can get with the safest of the cryptocurrencies, with the largest, with the cryptocurrency that's very, very likely to still be around in 5 years. You can't say that for every cryptocurrency. And so when you can expect that kind of a return over the long term, does it really make sense to gamble that much in crypto? Maybe the best approach is rather to take a lot of your assets and simply dump it into Bitcoin and buy regularly every month. Probably you don't want to buy everything at once because of the volatility. So you buy regularly every month and you simply let that money sit there. Let the money grow. And don't worry about all of these fluctuations, especially now because we are not very high, right? We are neither extremely high nor extremely low on this. So why not just simply dollar cost average in? Now, this is one approach. That's the logarithmic regression. The issue with this model is that recently we don't touch the upper band anymore and we don't touch the lower band anymore, right? People recently seem to front run the top, so they sell before they see the top, simply because risk versus reward at these elevated levels is already not as good. And the same is true the other way around. People tend to buy before we have completely bottomed. And so the volatility, it might decline further, right? Maybe we don't see these 80% drops anymore. Maybe. Who knows? And so another way to draw this, even though less scientific, is to try to connect each of those tops that we have already seen. And the same goes for the bottom. That's again the exact same chart, this time in tradingview.com. And let's try with a curved line, so no logarithmic regression here. Let's try to simply connect these tops and see what we get. This is what you're looking at. So of course, this looks way less bullish, but it's simply another representation, and we want to work with the worst case. And the worst case is that we have already topped out. We really want to look at risk versus reward. We want to be objective. And in order to be objective, you have to look at what potentially could be the worst case. Now let's try the same with the bottom prices over here. So again, we simply draw a curved line. And what's already interesting when we just look at this is these curvatures, they don't completely match, right? We have got more curvature at the top than at the bottom. And so at some point in time, these curves, they will even meet. And so again, let's try to find the worst case and let's pretend we just go straight down. The same way we went straight up over here, let's pretend we're going to go straight down. This is how such a curve could look like. And so in this case, the worst case would be a bottom of 14.6K. Now that assumes we are really not going to get any kind of consolidation at all, right? We are just simply going straight down. I don't think that's likely at all. It might be way more likely that we see some kind of consolidation and bottom out way later. But again, we want to work with the very worst case. So the worst case for the logarithmic regression was 19K. The worst case for these curved lines, when we simply continue crashing, that's 14.5K. And that's how I see it. If these prices become reality, which of course is a very, very big if, but if it is what we're going to see, then we've got a real nice buying opportunity over here. This would be an incredible capitulation. And it's very important that you mentally prepare yourself for this, even though this is unlikely to happen. But a lot of people, when they would see something like this happen, they would panic. They would panic sell. They would get outside of the market. We have come even below the top of the last bull market, right? The top of the last bull market was around 20K. 14.5 sounds pretty unheard of. And so a lot of people would see the long-term trend to be broken, right? Stock to flow model would be pretty much broken. The 4-year cycle theory would be broken because we never went below the last cycle's top, right? We would then suddenly move below the last cycle's top. So a lot of structural change, but not necessarily if you draw it in this way, right? Not necessarily when you draw the worst case. This could still be a buying opportunity. And that's, I think, what you have to mentally prepare yourself for. Be ready to buy when there's real blood on the streets. When we see 19.5K, 14.5K, whatever it is, when we see these kind of levels, that's not a reason to panic sell. That's a reason to do the exact opposite. And that's why it's important to risk manage. You don't want to be 80% in altcoins, because if we would see such a drop in Bitcoin, right, say another almost 70% drop from here, if we would see something like this, then the altcoins, they don't just go down 70%, right? They go down 80%, 90%. It basically destroys your entire capital. And if we extrapolate this for long enough, right, if we simply invest not just for the next 2 or 3 or 4 years, but when we invest for, say, 20 years, 25, 30 years, at some point in time, that kind of a move might happen. You want to set yourself up that you're never in a situation where you lose 90% of your capital. You want to set yourself up that you can potentially take advantage of situations that are extraordinary, because those opportunities, they don't come around very often. And I know I'm repeating myself, but I very often get these confused. I don't think that this will happen. I simply think this is a scenario. Maybe a scenario of 5% chance, maybe of 2% chance. Who knows what the probability of this occurring is, but it's definitely not zero. There is a chance. Now there's another way to look at this. These were just curved lines. Let's look at a moving average that historically has been a very nice bottom indicator for Bitcoin, and that's the 4-year moving average. So that's this line over here in blue. And we can see historically we have always bounced off that moving average. We only went below this very, very briefly. But even after a crash, right, we didn't always come down to the very bottom of this curved line. We actually bounced back earlier around the 4-year moving average. And so again, the 4-year moving average is above this curved line bottom. And so let's just try to randomly extend this out in the future, because we don't know what the future prices will be. So we can't perfectly predict where the moving average will be, but let's just draw something and let's again work with the worst scenario, that we will simply straight come down from here without any consolidation at all. In that case, the bottom would be at around 21,000. So we've got 19,000, we've got 14 or 15,000, something like this, and we've got 21,000. So different approaches give different answers. And of course, none of these approaches are perfect. The average of those approaches comes to 18,200. So let's say 18,000, right, roughly. So 80,000 would be the average worst case of all of those models, of all of those approaches, which is again below the highest price here in 2017. We would fall below that. Now, what do I do in order to navigate this, right? Because this is obviously risk. It's not likely that this will happen, but it's a scenario, right? I think it does make sense to be long-term invested, simply because of the annualized return over the very long term. So I do think being in Bitcoin over many, many years is very likely to pay off. But I also think it makes a lot of sense, since there is so much reward and also so much risk, to be cautious with the risk, to manage the risk, to be prepared in case the risk materializes into a negative scenario. So don't buy things on leverage. Don't have 80% of your crypto portfolio in altcoins. Don't have zero cash or zero exposure to, say, stocks. You could potentially shift assets from stocks to crypto in case we do fall. Don't do any of these risky things, because the reward is already very high per annum. You're not going to get rich with, say, 70% per annum, at least in the short term. You're not going to make a 100x on $1,000 and suddenly have the down payment for a house for that. But you do have a solid long-term investment vehicle here. And besides the high return, you've got the added benefit of the low correlation to, say, stocks or property. So crypto doesn't crash at the same time as property does. And the correlation coefficient of Bitcoin to, say, the S&P 500, it's around 0.2 historically speaking. So it's pretty low. You are able to take advantage of these depressed prices if you're also invested into stocks, because the crashes, they are unlikely to happen at the same time. You can shift things around. And so this is what this video is about. This video is about managing risk. This is not about drawing the ultimate doom scenario. This video is about being prepared, being flexible, staying flexible, being happy in case it goes up and we all make money, but also being prepared in case that doesn't happen, and being mentally ready to be one of the very few people that have the courage to buy when everybody else thinks it's over. That's what this video is about. This is about fighting the hysteria, fighting the moon stories that we're gonna go to 200,000 in 6 months. And it's also fighting the bears that say we will go to zero at some point, because this is what will happen in case we do see at some point a crash. It might not happen now, right? But in case we do see a crash where Bitcoin goes down, say 60 or 70%, or let's say we do see a price that's below the last cycle's all-time high, those people will be very loud. The people that will say that Bitcoin is going to zero, that the long-term party has finished, that crypto won't survive. These kind of articles, these kind of interviews, you will hear them all over the place in all of the news outlets once we see a crash. So it's important to mentally prepare yourself to be able to fight the mass psychology and to have the courage to take the one asset that has still relatively held up and put that money into something that everybody declares to be dead. If you're mentally prepared before this happens, that this is a situation you might face at some point in time, that mental preparation gives the energy that's required when the stress is really high, when there's really blood in the streets. If you enjoyed this video, please give this a like. YouTube will then help to grow the channel. And if you've got questions around investing, around long-term outlooks, if you're looking for tutorials on how to construct a portfolio, feel free to check out the premium membership as well. You can find that at bitcoinstrategy.com. Link is also in the video description. If you haven't yet, feel free to subscribe as well. And last but not least, we've also got a public Telegram channel, the Bitcoin Strategy channel. Feel free to simply search for this within the Telegram app. See you next time. Bye-bye.